Good evening, ladies and gentlemen. John Kelly for Options University on Sunday, December 18th, 2011. First, the disclaimer. Trading always has been, always will be risky. And the risky now, we have December option month behind us. It was a very difficult month for me, my most challenging month in over 3 years. And it really came down to the last few days whether I was going to make or lose money for the month. First time in over 3 years I made money, but it was a struggle. After my best month of the year in November, where I had a 9.5% return, I realized a 4.67% return for the month of December. Now, as we go into the January option cycle, on Monday, it is a 5-week cycle versus a 4-week cycle, and they always are problematic. But we are also going from 1 year to the next and going to the 4th year of a presidential cycle. So there's a lot of things here you've got to be aware of and take a look at. On average, for 4-week cycles, the percent positive is 74%, and when there's a positive return, you get a 4% return, and when there's a negative return on average, a 3.4% negative return on average. Now, we go to a 5-week cycle. There are fewer of them because there's just fewer of them. Percent positive, not as many positive as the 4-week cycle. Even when they're positive, they only return about half of what a 4-week will return. But when they lose, they will lose over twice what a 4-week will lose. So be aware of that, and then look here at each week of the 5-week cycle. It is the 3rd week that's the big loser, but the first week will also get things started off in the wrong direction. So keep that in mind, and as we go in and open up that cycle tomorrow. Now, we also we're looking at December, and the month of December typically is the most profitable month of the year. And the expiration week is the most profitable week of December. Expiration Friday, the most profitable day. Well, what were the results last week? Remember, with Thanksgiving week, it normally has been positive every year. And it turned out this year, Thanksgiving week, was the worst Thanksgiving week since 1932. December expiration week was a disaster. The cash Dow was down 315 points, and the S&P futures down 42 points. The NASDAQ down 88 points. But what kind of economic news did we have for the week? It was very positive. The Fed came out and said they were going to hold rates steady through 2013. That should offer the market stability that it likes. Empire Manufacturing came out, was triple what they thought it was going to be. Capacity utilization was solid, and the Philly Fed on Thursday doubled what it thought, what we thought it was going to be. But Europe was the problem child. By Monday of this week, last week, the market realized that the European summit produced no real agreement. Nothing will be done or has to be done until April, and they're politicians, and you know what that means. Nothing will get done till April. They will go on their merry spending ways, losing money. Well, Moody's, Fitch, and the S&P all came out and said we're going to downgrade the banks, we're going to take AAA ratings from France and Germany, and they started downgrading the lesser European countries. The market did not like it and went into a tailspin. So, what are we looking at for this week? This week is housing week, and it's the end of the earnings cycle, so there's very little in the way of earnings news. Housing market index on Monday at 10 a.m., and then Red Hat will report after the close. On Tuesday, housing starts once again, expecting 627,000 in that number. Before the open, General Mills cereal will produce, and after the close, Nike and Oracle. Remember this last week, we had very good news from Intel. They were very positive on everything that they had to say. Wednesday, existing home sales and crude inventories. It's all about housing this week. And then before the open, CarMax and Walgreens. After the close, Bed Bath & Beyond and TIBX, a very strong stock. Take a look at it. You get a chance. On Thursday, once again, weekly jobless claims. Leaky jobless claims came in this week at 366,000. all it could do was keep the market even. It initially rallied the market 100 points, but we gave it all back during the whole day. The same with the news on Friday. We rallied 100 points and gave it all back by the end of the day. It was quadruple witching Friday, and there is a lot of volatility on that day. But this Thursday, after weekly jobless claims, we'll get the GDP third quarter estimate, hoping for 2%. Michigan sentiment, a day off of normal, but we're in Christmas week, so to be indicated. And leading indicators at 10 o'clock, and no earnings before or afterwards. And then Friday, we close up with durable goods and personal income and spending and new home sales. In earnings, nothing. Now, which way to go with what this week? Remember last Sunday I gave you a chart of average returns for stocks that ended the month of December very, very positive. In the last 10 years, 9 out of the last 10, 8 out of the last 10. Here's a good start to take a look at. And for the negative side, here we go again. 0 times has open table ended positive for the month of December, and likewise for all these stocks here. Now I'm going to take a very early quick look at January and the presidential cycle because we're in a 5-week option month with January. January is the barometer predictor of the year. 77% of the time, if January finishes up, we'll be up for the year. If January finishes down, we'll be down for the year. And the first 5 trading days, if they're positive, then the year, 86% of the time, has been positive. And the 4th year of the presidential cycle has been positive 13 out of the last 15 4th year presidential cycle as well. And without exception, since 1950, if the S&P is a negative for January, it signals and starts a new bear market. So January will be a bellwether. And remember, we have 2 more weeks in the January period, which is the first 2 weeks of the 5-week cycle, which are generally negative. And then we hit that first week of January, and we're also in the 5-week cycle in the middle, and that is generally the worst week. And those will be the first 5 trading days. So it'll be a very key indicator. Nothing has gone as seasonality and probability would predict. So be interested to see how that turns out. Take a look at a few stocks here for possible trades this week to the upside and the downside in the gold member section next. Okay, let's take a look at a couple of trade ideas for this coming week. Apple. I have followed Apple here for years and made good money. December was the 51st month in a row that I have made money on the Iron Condor, the bull put and the bear call. Month 52 is already on the table, and I'm in it. I have also been following Apple due to its nature here. When it came down, broke the 50, and touched the 200 and bounced off of it, I kept an eye on it all the way up to 426, and I knew that the next time that Apple broke the 50-day moving average, there was a good probability that it was going back down to the 200-day moving average, which when it did, and I went in at 393, I had a nice little move down to 363. I stayed in the trade, tightened up my stop, and when it reversed, it took me out. Still made good money per strike or per option on that, and then reversed and went long up to the 50-day moving average, where I was hoping that it would get up to 400, then these prior tops at 409, and then try and take out 426. I got stopped out this week. Made good money, about a third of what I made on the move down, made it on the way back up, and right now I'm neutral, waiting to see which way we're going to go with this thing. News out of Europe, we're going to go south, probably back to the 200. I don't know how many times it can go to this 200 and bounce off of it. One of these times it's going to fail. Or the market now has cleared the table for a late Santa Claus rally, and we'll move back up to the 50 and through it. If we start moving down, I'll use the 50 as my stop loss on the top side going down. If we start here for the top side, I'm going to wait for it to break the 50 before I go into it and use then the 50 as my stop loss. Another stock I like to the long side, McDonald's. It just keeps going up. The market has been struggling. What has McDonald's been doing? Going up. Now, we did see some selling action here on Friday, but I still think this is a very, very strong stock, and one that if this market's going up, and if you want one stock that you can protect yourself in, maybe buy some stock and do a covered call against it, do a leap and a synthetic buy right against it, which is what I'm in. There is good money. It has come nowhere near the 200-day moving average, and of course the S&P, the NASDAQ, and the Dow are all struggling with that and are negative. DEC is another stock that I take as a good trade to the downside. From 119, we're down to 89. We broke right through the 200-day moving average this last week on reports that their UGG shoes are not going to sell well in this next quarter. And you see the institutional sell-off that we got. It was a short rally here. If it'll come back up to the 200, it could give you another entry. And normally they do. They'll come back and retest and say, nope, can't do it, and away we go to the south. So keep a strong eye on DEC. If it comes back to the 200, I'd be poised to take it short if it breaks away. Sina is the other stock. The Chinese stocks right now are not doing well. This is the downtrend line that I have drawn, and it keeps going down. Came up and challenged it just once or twice here. Another good stock to short for the downside. So there we go for the week. The market opened up this evening at 6 o'clock, slightly positive, and is still that way. But we'll see what happens as it goes around the world and greets us tomorrow morning for the open. John Kelly, Options University. Good night.